How to trade the Asia session ICT new concept again 2025. I'm gonna break down how you can trade this, and let's get straight to it. So the first thing you're looking for the kill zone is between 7 and 9 in my opinion. Again 7 p.m. Chicago or Eastern time, and then 9 o'clock Eastern time is that where you're looking for the window to kind of strike. And within this kill zone, you then mark out your targets. All you gotta do is mark out your highs and lows that will form between 6 and 7. So you go into your charts from 6 o'clock p.m. to 7 right here. You can see that I marked out my highs. So this was a buy side liquidity, and then we formed sell side liquidity right here, and then we have some sell side liquidity down here with a new day open the gap. Long story short, all you're trying to do is target those pools of liquidity within that time frame. Now, what I like to do is kind of pair this with a higher time frame bias. So in this case, I was very bullish on the day. If I'll go into the back out and go to the 15-minute, you will see that we're actually popping down into a 15-minute fair value gap, a bullish fair value gap on the higher time frame, and hourly fair value gap on the higher time frame. So majority of the time, I'm looking for bullishness. Now you could trade this the idea of us taking the sell side, using this concept of just targeting here and then getting out here, which will be you looking at your model from maybe an inversion fair value gap right here. We come up, we keep this buy side intact, we break back down, a small pocket of price right there, put stop loss above here, and then targeting inside liquidity, maybe leaving a runner to take out some more sell side, and coming down here to leave a TP1, TP2, and start reaching maybe for a new day open gap. Again, the only biggest thing is that you need to make sure that you are in the bias of the higher time frame. Again, higher time frame, we're very bullish on the high time frame. So I saw this, I didn't want to take any shorts, but did notice that we left this high intact. Now if we went down or went up first then went down, that would be different, right? That'd be completely different, because then this is not here anymore. But since we just left these highs, I'm looking at this push down into the 15-minute fair value gap. It's 8 o'clock on the dot. You can see we're entering a macro, so that'd be your 750 to 810 macro right there up in here. Zoom in, coming up, leaving this as a bearish, or excuse me, a bullish breakaway gap. Why is this a breakaway gap? Because we have a run on stops right here in the opposite direction of the bias of us being bullish. Come all the way back up below all these above all these down close candles. Then we actually form this, and what I love about this is when you think about it, we actually, this small pocket price actually matters too, which this would be your full, gotta include the volume imbalance. I always include the volume imbalance. A lot of people don't know that. If you got a fair value gap right here and you have this small pocket of price, this is your whole entire fair value gap right there. Now I'm using this in an inversion fair value gap to understand breakaway gaps. I did talk about it in a video. You always, majority of times, going to have a a sell stop, or in this case a sell stop rate, but it's going to be some type of low that's going to be taken with a fast injection up of the opposite direction, and then you want to line up with your bias, with this being also have an inversion fair value gap on the side as well. On top of that, on this one, we actually have an inversion fair value gap and a breaker. So this would be a low, your high, your low, rip up. Since I'm saying rip up, this big up close candle right here, this actually would be your breaker. This would be your bullish breaker. So this is your bullish breaker in here. So I was able to buy up in here and then literally target these highs right here. And that was it. That was a trade. That was it. I didn't extend it for longer. I think this was a daily high up here, but that was literally getting in right here off this oil block and this proportional block, and then you got breaker block, got a lot of confluence, putting stop loss literally at this breakaway gap, because I don't want this to be traded back to. It shouldn't be traded back to when we have all these Peter rays, bullish breaker, inversion for that gap, and also I'm expecting this to be a breakaway gap if we're all gonna go up here. And again, you can see the sensitive price coming down there, literally poking, not even reaching to this fair value gap right there, which is a good sign of bullishness. And then we'll see it start shooting up higher. And again, I want to put the executions on just to show you that, hey, really trade it, right? So right there, boom, coming up, taking the buy side, and literally it. Yeah. So again, that's the way I look at it. This was low resistance liquidity, but the biggest thing is looking at that pocket of price between 6 and 7, marking that out, and that's gonna kind of frame my bias. And then I'm just layering that in on top of the higher time frame. Higher time frame told me it was bullish, marking out these highs as in, hey, this is what we're looking for anyways. Even if I wasn't, higher time frame, I'm still in line with it, and I just waited for it to be aligned up for this kind of a move or this direction of bullishness to go towards this pool of liquidity. Again, I missed on the sell and waited for this to get on the bottom side of the curve, following higher time frame narrative. That's why I think high time frame, if you want to understand breakaway gaps and drawing liquidity, you got to understand the bias. That's going to be the biggest thing, because then you will sort out a lot of different price movements that could be fake outs or not in the right direction when we are clearly bullish or clearly bearish. And if we're not clearly anything, then you should be in the market. But yeah, definitely I try to break this down. We have this video on here, and then I'm also gonna have some more videos detailing it in the Discord so people can get more understanding of it. Again, I'm not gonna put that on the YouTube, probably in Discord, where you got live examples and stuff like that. So kind of building it out. So join Discord if you want to find more value and value and stuff like that. But other than that, I think we're going to end it right there. And I said this is a good way to trade it, looking at 67 and targeting the opposite side of the liquidity. I might have another breakdown in the future, but hope this video helps and get you understanding. And yeah, it's a great tool to use. All right, y'all. See you next one.